This report got published last year by the Society of Actuaries and the Reinsurance Group of America. It's got data from 29 life insurance companies that have about 69% of the industry face amount. It goes through the third quarter of 2022. This page shows us the claims, that's right here, this column, by quarter, 1, 2, 3, 4, and going down by years for these different age groups. I want to focus on the 0 to 44 and the 45 to 64. So let's look at the younger people first. 2019, you get numbers that are in line with what we've seen before. If we look at the earlier years, have you seen numbers like 22s and 23s? Sure. You've even seen as high as a 25 before. Now we get to 2020, the greatest pandemic known to man. We got a 24, but it's just starting. This is a new high score for this series, a 26. Next quarter, a 28, even higher new score. Fourth quarter, another 28. So this thing is looking bad. Now we come to 2021, 26. So at least it hasn't hit a new all-time high. We got another 28. Third quarter, 2021. By this time, a whole bunch of these people are 2 countermeasures in. All-time high score, 3,500. Fourth quarter 2021, we get another 3,000, but now it's a 3,100. These are way above anything that was seen during the deadliest pandemic, 2020. First quarter 2022 would have been the high score if it wasn't for these two. So the 3 highest ever are happening when a bunch of these people are at least 2 countermeasures in. And by here, they're probably 3 countermeasures in. Now we're down to 26. Well, we've seen those before. 25, hopefully things are cooling off. Now, let's look at this slightly older people. Doesn't look quite as grim. 2019, a nice green year. Numbers in the low 12s. First quarter of the pandemic. Second quarter, we do get a new, never before seen number, a 13.8. We've seen 13.6s and things like that back in before any of this started, but this is a new high. Drops down, but it's still up there. Another new high. So 2020 was not good for this age group. First quarter of 2021, the worst yet. Second quarter is remarkably better. Maybe that's those countermeasures kicking in, which within this quarter, a lot of people would have had 2 already. Third quarter, now you've got by a lot the highest amount of death claims. And the fourth quarter, what would have been the all-time high score if it wasn't for the third quarter. By this time, a lot of these individuals would have been on their 3rd countermeasure, would have just been getting it. Here's something else you wouldn't expect. You know, life insurers do health exams, or if you don't want to get one, you're going to pay a much higher premium. And they can put you in different policy types. So they got preferred. That means people, they got a medical exam, they looked at their records, they checked them out and said, this person's a good life insurance risk for the company because they seem really healthy. They seem like they're probably not going to die. Whereas the standard, they either didn't get an exam or they got an exam and it doesn't really look good. As we go beginning of 2020 to the third quarter of 2022, this line here is just like the baseline based on up to the end of 2019. And if one of these bars goes over that line, then that's the amount by which it's excess mortality, excess over expected. So in each one of these columns, which is a quarter, this whole thing is 2020, then this whole thing is 2021, and then these last 3 are 2022. There's something funny going on whenever we see this middle bar being quite a bit higher than this last bar here, because that means that in this quarter, the preferred policyholders were dying at a higher ratio of actual compared to expected than the standard. Up until the point where they decided to engage in these countermeasures, they had been the ones who were healthier. And it's not till the third quarter of 2021, and again in the first quarter of 2022, and then again here fairly substantially in the third quarter of 2022,